Gold on fire, showing its safe haven appeal in full force following the news of the UK voting to leave the EU. Gold soared over $100 on the news to $13.62. It has come down, sits trading around $13.16 right now. So now what? What's next? Peter Hugg, Senior Trading Director for Kitco Metals, joins us on Kitco's Gold Report for this very special news day. Peter, good to see you.
Good to see you, Daniela.
How tired are you, Pete?
Got a couple hours last night, but that was about it. We traded all through the Far East and the Singapore markets when the vote process was ongoing. So it was a market I've never seen in the 43 years I've been in the business. It was certainly interesting would be a word I could use, but I could come up with a better word.
Let's recap that night. The British pound posted its highest and lowest level in 6 months on the same day. The yen moved in a 7% range. Global equity markets dropped as much as 10%. Gold spreads on the wholesale level stretched to $10. Have you ever seen anything like this, Pete?
I have. I mean, I've seen them. I've seen a lot of these things occur in isolation. I mean, back in 1980, when I traded the gold market, the spreads on the gold market were as high as $30 on a wholesale basis. And I've certainly seen currencies on an individual basis, drop 5-8% during a day. And I've certainly seen equity markets drop, anywhere from 5 to 10% in one day. To see it all happen at the same time in a 6-hour window, I have never seen that. And it was just an incredible event to watch. It was, again, I'm still amazed that the Brits voted to leave, but over and above that, the action in the markets was just unbelievable.
So now the question is, what happens next, Pete? I know you don't have a crystal ball, but when we come in on Monday, what can we expect from the gold market here?
I think if you recall the conversation we had a few days back, I made it relatively clear in my mind that the market had not priced in a leave vote. I mean, that was absolutely not on the table. There wasn't even any speculation that there was a chance. There was some speculation that it would be a close vote, but they certainly, everybody that was in the market was anticipating that they would stay. The question was asked of me, what happens if they do leave? I said, almost guaranteed you'll see a 1300 handle, and possibly as much as a 1325 move. And I think that's where it would have been contained had this vote occurred while both the Europeans and the American markets were open. The exaggeration of the move occurred because the news came out when the markets that were trading were Far Eastern markets, which are generally thinner are thinner than European and US markets. So the moves were exaggerated. But when I made that comment a few days back, I thought that around the 1325 level, the market would sort of rest and then try to figure out and analyze what this means. And quite frankly, it doesn't mean a lot yet because, the Brits do have 2 years to renegotiate the trade. There has been some jabber in the market that other countries are looking to hold a referendum. But even in that context, if that were to happen, these are 3, 6, 9-month processes. So I don't see anything immediate other than the fact that this will now for sure keep the Federal Reserve quiet and not raise rates for the balance of the year.
So, Pete, do you think it was just an extreme knee-jerk reaction here? How gold
No,
played out?
I think there's genuine fear, and I think there is a possibility that this plays out to an eventual disintegration of the Eurozone. And what that brings is major economic uncertainty, certainly financial risk to the banks in Europe. So there is genuine reason why this gold market should be trading higher. But if you're asking me for, where's gold going to be on Monday, it could be at 350, it could be at 1300. I believe with what happened with the British vote and the uncertainty that that's going to create going forward, it certainly creates a floor for gold. And, I'll put that floor at somewhere around 1250, 1278 range. The upside potential, should this get nastier, where other countries now are starting to join the parade, gold over 1400 is certainly a very real possibility.
Yeah, for sure. We'll have to see which countries are next to join that parade, as you say, Pete. Earlier this morning, a famed economist, Dennis Gartman, also noted how he plans to add to his gold positions in yen and euro terms. What do you think about this strategy of diversifying your gold holdings outside of the dollar?
Personally, I've been a foreign exchange trader since 1973. It makes absolutely no sense to me. If you're thinking gold is not going to move up against US dollars, but it's going to move up against the yen and the euro, what you're actually saying is you expect the euro and the yen to drop against the US dollar. So why you would put a gold trade on against yen or euros makes no sense to me whatsoever, if you're not expecting gold to go up in US dollar terms. If you are negative the yen and the euro, a more liquid market to capitalize on that trade is to short the euro and the yen against the dollar. Why you would include gold into that equation, I still have not been able to figure out. I know he's been saying it for months, but maybe I'm just not smart enough to figure it out, but I can't understand why you would put gold into that trade. Unless you think gold is going to go up against the US dollar, then yeah, fair enough. But then you don't need to bring in the argument that you're doing it against yen and euro. It sounds to me like he's looking at the euro and yen going down, and he wants to hedge his gold bullish bet by saying, I'd go long against those currencies, but not necessarily against the dollar. To me, it makes no sense.
All right, Pete, thanks so much. Exciting times indeed. Thank you so much for joining us on this special edition of Kitco's Gold Report.
You're welcome.
Get some sleep, Pete, and thanks for watching. We'll see you on Monday.